Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an update on Varun Beverages. Our analyst maintains positive view on Varun Beverages with potential upside of 15% in the next 12 months. Varun Beverages Q4 for calendar year 23 numbers beat our expectation with revenues and PAT growing by 21% and 76% year-on-year respectively. Volume growth of 18% beats our as well as the street expectation of 12 to 14%. Despite vagaries of unseasonal rains, the company performed well in calendar year 23 with 14% volume growth and EBITDA margin expansion of 100 bps. Management expects growth momentum to sustain in the coming years. After a capital expenditure of Rs 2,500 crore in calendar year 23-24, Varun Beverages capacity will increase by 45% over calendar year 22. Varun Beverages targets a debt to equity ratio of 0.67 times despite the capex plan. The stock trades at 69 times calendar year 24 and 54 times calendar year 25 estimated earnings.
Next we cover Torrent Pharma. The company has reported highest ever EBITDA margin of 32% driven by double-digit growth in the branded business, double-digit growth in the generic market of Germany. The management expects the growth momentum across geographies to increase, led by higher MR productivity in India, higher execution rate of tenders in Germany, resumption of new product launches in US region, and double-digit growth in Brazil market, which to result in increase in margins annually. The company is not scouting for any further M&A and intends to grow organically. Hence, we believe proceeds of the cash flows to be utilized for further debt repayment, resulting in the increase in the earnings. Hence, we have upgraded company's EPS by 2% each for FY24, 25 and 26. At current market price, the stock trades at a valuation of 39.3 times FY25 and 33.4 times FY26 price to equity. We believe the premium valuation will sustain due to double-digit growth in the branded market, launch of new product in the US to increase sales to $50 million, and increase in EBITDA margin by 50 to 100 bips on a high base of 32%, and repayment of debt through increased cash flows. Finance cost decreased by 22% in Q3. Hence, we raised our price target to Rs 2,954.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.